Welcome back to Sunny Stocks India. Today we will try to value Samhi Hotels. It appears to be a multi-bagger in making. Founded in 2010, Samhi Hotels is the largest owner of multi-branded hotel rooms in India, completely backed by institutional investor right from the start. They either acquire or build hotels. They further partner with global brands for distribution and operations. Their current partners include names like Marriott, Sherton, Hyatt, Renaissance, Holiday Inn, and they are continuing to add more brands as well as properties. These partnerships provide Samhi access to the global reservation systems, marketing strategies, operational expertise, loyalty programs, and industry best practices. The first reason I picked up Samhi Hotels now is because in these 15 years since inception, the business has gone through that long capital intensive cycle of building infrastructure at right price and in the right markets. They now have enough supply of rooms across all major cities and holiday destinations in India. The business is at a point where free cash generated from this installed capacity of rooms would be adequate enough to fund next 3 to 4 years of growth without raising further debt or equity dilution. Today, Samhi has around 38 hotels with 6,500 rooms across 14 cities. Another major reason I picked up Samhi Hotel is because of their continued efforts to bring down their debt levels. They are now at around 3 times debt to EBITDA. They achieved it by both selling non-core hotels and increasing free cash flows from operations. Efficient allocation of funds is very important in hotel industry, which is very capital intensive. Samhi's current allocation strategy appears to be very efficient that creates value for the stakeholders. From the cash that they generate, they have committed outflows of 60% towards project in pipeline, which leaves them with a healthy 40% residual available for growth opportunities. Now let us look at the latest financials. Despite the geopolitical disruptions, the revenue per available rooms have been growing quarter over quarter. Even across the cities, there was a healthy growth with exception of Delhi NCR, which was caused because of banquet renovation in Hyatt Palace Delhi. In FY26, Samhi did around 1250 crores in revenue and an EBITDA of around 431 crores. Their debt is around 1700 crore, which they are able to easily service. Their further capital expenditure is less than the free cash they are generating, so they will continue to deleverage without compromising growth. The management has even indicated that on long-term basis, the company aims to achieve around 1.5 times the net debt to EBITDA. Because unlike traditional businesses that get loans for 3 to 5 years, Samhi is able to secure asset-backed financing for 12 to 14 years at an average price across the group of just 7.9%. So they are very well placed today as they have the ability to both grow the company and not exert any pressure on their balance sheet. Next, let us try to value the business based on the potential revenue and profitability forecast over the next 3 years. Note, the management has given a guidance of 9 to 11% revenue growth from the same inventory of rooms. To that, we need to add the revenue from new properties that are opening up. Considering both, the business is expected to add incremental 650 crore in additional revenue at a 40% margin over the next 3 years. So if the company is able to achieve a revenue of around 1900 crore by the end of financial year 29 at a margin guidance given by management of 40%, the business would be doing an EBITDA of 760 crores. Let us deduct annualized interest outflow of 136 crore and depreciation of 140 crore. The company would be doing a profit before tax of 484 crores, which would result in a profit after tax of around 363 crores. And at a median PE of 31, the business would deserve a market capitalization of around 11,250 crore by the end of FY29, that is in the next 33 months from now. Samhi is currently valued at around 3,900 crores. This means the business has the potential to almost triple in the next 3 years. If the macros favor, that is no more wars or pandemic, and hopefully travel which has picked up will continue to grow, then it is highly likely that the target is achieved because at the company level it is very well run by an efficient team. The current share price of 176 could go past 500 plus in 3 years. This was my analysis of Samhi Hotels. Keep tracking the quarterly results and make sure business stays on track and do your own research. Thank you and bye bye.